All right, everybody, it's Axe with Cake Trades, and it's Sunday, May 29th. We're getting ready to go into a holiday week. It's a holiday weekend, whatever you want to call it. We have a futures market open tonight and tomorrow, no cash until Tuesday. I've tried to make this video a couple times, and each time I've had one issue after the other. So by now I'm a little worn out, and I'm going to try and breeze through this, but perhaps I'm rehearsed. Maybe we can view it that way. Anyway, I'm going to go through 5 tickers that I think impact the market a lot this week and the coming weeks. And going forward from here, in our Cake Trades Discord, the free section, I'm gonna take a request, basically a thread every week. The 5 most requested tickers. We'll try and do a video every weekend if I can keep up with it, if not every other weekend. If you're not in the Cake Trades Discord, there is a free section. Check my feed for a link of my Twitter bio, or just DM me, reach out on Twitter, whatever. We also have a pro section with the premium Discord community, 3 to 5 times a week newsletter, multiple indicators, constant content to keep people informed on the market. So if you like this but need a little bit more help, then reach out and we can show you how to get in on a 3-day trial. Anyway, this isn't about that. This is just about some tickers, right? So I've got Apple open. It's a daily chart. And, basically, if I switch to a 4-hour chart here, those that followed me for a little bit, followed Cake Trades, know that we hit this short right at the right spot, right? So this was a beautiful short that printed, so we went from 149 to 130, almost 20 points. That was really nice, but that was the end of what I would call a 5-wave bear impulse, right? So we sort of had a 1, 2, 3, 4, 5. The 5 went a little lower than it probably should have. I think we wanted, I think more accurate would have been like 9%, but it came down here and wicked down. The thing about these wicks, though, is they tend to get revisited or filled out later. But it makes sense, where Apple bottomed here. Apple bottom, don't even get me started. Basically, we had this August, September, during the SoftBank era back in 2020, we had this melt up where we consolidated. Apple had this beautiful wedge that sort of broke out and printed a distribution top. And here we are back retracing into the 130s, right? So right in the heart of this chop zone. So we bottomed there. In a 5-wave impulse, we're always going to retrace the 4 or most of the way to it, right? And so here we are. It looks like there's a gap here. Maybe it was filled with this candle. Anyway, we've basically retraced this, and now we're at resistance. And the key is, are we going to break out, or are we going to fail here, right? And so for me, watching price is really just a matter of if this, then that, right? So we know this is a pretty significant area. If we can get into this area, we're probably going to float around in here. There's not a lot of trading that happened, so there's not a lot of resistance. The real resistance is up here at 156, right? So we're looking, we retrace this last part of the impulse. That completes the move. Typically, you can get like an A, B, C, and we could come down here and double bottom, or sort of come into this 137 area, clean up these wicks, which are mostly clean because they've hit a couple times. But this is a big gap here that I think gets filled. So if Apple fails here, I would not be surprised at all. And just to go back to the daily chart for a minute, we have this gap, right? So if Apple fails, I think we're definitely going to come down and fill this gap. And if that fails, we're coming down here to this 130, 132.50, that low there to fill out that wick. If it breaks out, I think we're going to come up here and test 156, and then it's a matter of do we keep going? And if we keep going, we're gonna shoot to 166, probably 171, and then there's a gap up here. That's a lot to ask, to be honest. So I could see something very similar. We come up here and we retest this, right? Then it's a question of, does that fail and we come down here, something like that, or does it hold and we come up? There's a lot of different ways you could view it, but basically I view this as a pivot. And once we get into this pivot, okay, we're definitely going to face some resistance, and it's a matter of, does this 150 hold? If 150 holds, we're going to start climbing our way back up here, and we're going to start targeting higher prices. Again, I think 170, there's a wick there. I like to target wicks and gaps because those are liquidity magnets where price has visited but hasn't completed its mission yet. So I like to target those spots. So eventually this gap up here, the question really for me is, do we fill this wick out first or not? So we're watching this zone, key spot right here. Do we break out? If so, we're probably going to get to 156, and then it's a matter of how does price respond. And you can follow the arrows there. It's pretty straightforward. Now let's go to Tesla. And Tesla also has a gap here from that same move. I guess this was from Thursday into Friday, right? We left a gap in a lot of tickers. But Tesla is similar resistance, right? We bottomed right where these wicks are. July of 21. It's similar to Apple, right? We melt up, come down, consolidate, grind higher, breakout, distribution top. Tesla in the March run up retraced 78.6% of that low or that drop. Similar would take us to 1,000. I think that's a lot to ask, even though the market printed back-to-back 80% upside days last week, and that tends to mark major bottoms. You know, it's a different time, right? The Fed still hasn't pivoted. There's a lot going on behind the scenes. So we'll see. But I don't want to get too far ahead of myself. I want to say, okay, what happens here at 761, 762? If we can get into this range, it's like Apple. We probably chop around in here until we get to 805, right? What happens at 805? Do we fail? If so, again, there's this gap here. We don't really have any wicks to clean up below, so that's a good thing. You know, Tesla could break out, and there's a spot right here. I'm just gonna fill that in for you. All right, so there's a spot right here, and you know, I can see us breaking out, hitting that, and then what happens? You can see back in March, it basically went straight up into the 78.6. In fact, it went higher. So we've got a wick up here at 1090. If things get really out of hand to the bull side, right, we could just climb straight up into that. And I'm not saying it can't happen. The market's in a prove it to me phase right now. So if we break out, I think, you know, we could chop out and do something like this. We could come up here and bounce. And again, when we fail, we're going to come down and look to this. So that's sort of the pivot right here in this 760 to 800, 805 range, right? And that holds the key to higher prices. So if we get up into this range, we know, you know, eventually 1,010 is a good target, maybe even higher, 1092. If we fail at any point and we look at saying, okay, maybe this was like a bit of a zigzag, or like this is a larger bear impulse, we could, if I'm just going to measure this, you know, that's 43. That's a 43% move. Crazy, right? 45, right? Let's say we follow the same thing we did here and we retrace up to like 1088. What's a 40? Yeah, it puts us down in this range. You know, somewhere around here. So for me, if the market's going to continue to get lower, and I'll show you like ES, I've got potential target. You know, if we fail up here in the 3600s. So same thing, like if Tesla gets up here and fails, we could get, you know, we could get much lower. What was this, 43%? And this one was 46, yeah. So we could get down here into this 580 range, and you know, there's some work to do down here. So I wouldn't be surprised to hit those. Ideally for bulls, we'd rather just keep going straight up, right? So we'll see. But basically, not to make too much of a mess out of things, but for Tesla, we're in our pivot range here, right? If we break out, we're looking to target this gap. If we fail, we're going to target this gap. If we get up to here and we start to realize, okay, we're going to slip, same pattern, this sucks, you know, look down to this range 590, possibly as low as 550. If we break out, you know, if we start to set a higher high, if we're able to get over 1150, now we're talking, right? Now we can come down and so maybe it's like an inverted head and shoulders type of thing, right? We can get up here, we can do something like that. I don't know, I don't want to get too far ahead of myself again, but that's what we're looking at. Here's your pivot. You're watching this pivot. Higher prices are marked, lower prices are marked. Let's go to AMD. AMD, this is from my previous video, so some of the work's already done, but basically we're grinding higher in this like corrective pattern. We've already retraced the 4th to the 5th, which is good, and I think that's leading the market. Semis are leading the market in general lately. And so we've broken out of this resistance, and I think, you know, again, I'm not always into trend lines, but this one tends to work out, it tends to fit. So there's a gap up here in this range of this 105, so I could see us coming up here to test this zone, and if it fails, you know, we're going to come down here maybe to fill out this 8350 low and double bottom or something like that. And if it breaks out, we can see sort of like a breakout back test and new highs on the way. We've got a wick to clean up right around this range, so I think 125 is a good price to target. You know, we've been making higher lows. Well, we have one higher low. Ideally, we can get up above this 126 range and we can print a higher high, or at least a higher local high, but we'll see. And again, if AMD fails, we're looking somewhere in the 74, 72 to 75 range, I think. That's sort of the low in this spot. I'll just draw it out for you. Looks like maybe we even have a gap down here, which isn't great. I'm not one that believes gaps always have to fill, but while we're down here, it makes sense. So you're looking at 70, AMD 70. Quite a drop from our 164 high. But anyway, we're into this. We're getting ready. You know, we basically got to break out real quick. If I turn the charts off or lines off and everything, a lot of people say, okay, we're getting ready to break out here. We're at resistance, a breakout, very constructive. And I agree, but a lot of times people forget that sometimes we're just doing some price cleanup, right? Here's a wick that 104, you know, if we clean this up and fail, we know this whole move was just to get up here and fill this weak high and then come back down. So don't get too excited on every potential breakout. I personally like to, you know, if we break out, we break out, but I like to keep an open mind and say, okay, maybe this was just, we have to fill in, clean in these gaps, fill in these gaps, liquidities, spots, weak highs, that sort of thing. So don't get too excited. If we break above this gap, now I think we're excited because we can fill this gap, fill this wick, and carry forward from there. But for now, we're just going to take it one zone at a time. Let's see what happens if we can get to 106.80. That's fantastic. Let's go to NVDA. And again, I've done some of the work already, but you know, I'll just turn this off. Basically, it looks like maybe there's a gap, maybe there's not. Not a big deal for me either way, but there is some wicks down here to clean up. I don't like to leave that behind. So if we get up, let's just say we're going to target this 195 area. If we get up to here and we fail, I know we're definitely going to revisit this wick area here, or sorry, this gap, and probably down to 156 and just complete that that fill. All right, there's a little bit of a, you could call it a liquidity trap if we come down here and fill it, but there's some work to be done down there. If we're able to get up and above out of here, maybe let me turn this back on. We've got a gap here in this range, and we've got a gap here in this range. So 260, 227, 250 to 260, those are some gaps. So we basically, again, to do the trend lines, we could break out into this 205 range, and that retraces that 4 to 5, which is what we're seeing across the board. If we fail, I think we're going to come down here and double bottom and then bounce, right? If we get up into this similar retrace, it was a 61.8% in March. So if we get to 227, let's say we fill this gap and we start to fade and we never catch a bid, or it looks like it's setting up a new impulse to match that ES 3600, you know, we could get down here to 135 and that fills some gaps around here. It could get as bad as 115. So those are the target. 115 to 135 is where I would watch if we're to break and set new lows. But for now, we're basically watching this pivot. Okay, what happens if we get to 206? If we fade, there's a gap. There's some liquidity action here that needs to take place. If that holds, we're going to bounce and try to break out of here. If we break out now, that's significant because it's multiple price zones accumulating into one area, right? So if we can break out of this 206, I'm going to look to target 227 to 250, 260, and we're going to probably come down and retest this this breakout and then hopefully bounce. If we fail, again, we know what to look for. So those are pivots for NVIDIA. Let's go to Amazon. This one was a huge distribution top. If I just go to the weekly, basically we had this breakout here, and we formed this distribution top from July of 2020 to basically April of 2020. So, or 2022. So almost 2 years. We have a trend line here that broke down. We back tested, and then we began to fall. So when we fail the back test, that's when you know that's a short, right? So we came down, we do like a 5-wave impulse. We're trying to get back to 225.30 to retrace that. Over here, I have this highlighted because this is what I would call liquidity gap, right? Price did not see any resistance. It just melted right through it. So we came down and revisited that to fill in that liquidity zone. And that's why we bounced here. And it's why we visited here, and it's why we're bouncing, because that work is done. So we're going to come up to 25.25, and we've got a gap here. So the question really is, once we get to this 4, are we going to come down and probably, you know, refill one of these gaps, one of these zones? So let me just drag out the brush here. So we can get up here and maybe something like this. That would be nice. But basically, we're looking to target long term this resistance at 27.55, and if we can get 27.55, that gives us a back test of resistance. It gives us a good long, number one, from here, but it gives us a good spot to short if it fails. And if it fails, you know, we're going to come back down. Again, we've got these spots in here, these gaps that could fill. We know support is at 20.33. And if that fails, we're probably looking to come down to 16.20. I view support and resistance as a range, not really a specific price. So, I could see us coming down into this range right here and trying to bottom. But then we have a huge problem, because that means the market's much lower. Basically, Amazon now looks like the Roku chart, and that's not good, right? That's a 50-60% haircut. Now, let me just get you an exact number here. Yeah, 58%. So what I'm looking for, bulls want to see this range taken out, breached, and held. So we want to get up here and hold it, and get back up to here, right? Even then, if we get up to this 37, where the all-time highs are, that's still a back test of a breakdown. And if that fails, we're coming back down. It's not great. So Amazon's chart to me has a lot of work to do. I could see something like this. I could see something like this. And then it's a matter of, does this bounce or not, right? So we're looking for these ranges. This is our pivot. We know we're going to get up to this 25.50 range. What happens at 27.30? Which range becomes our swing support? If we don't have any, we know where the lows are going. And then can we get above 27.50? I think it's going to be a tough ask, but you never know. So that's what we're watching going into next week. I hope this helps. Like I said, going forward, we're going to start taking chart requests on the Discord. The Discord link will be in my bio on the Axelwork and the Cake Trades Twitter. So there's a free version there. You can just sign up, get in. There's no commitments, no strings attached. We're going to start doing this once a week if we can. And again, if you like this and need some extra help, or think more advanced charts, techniques, newsletters, indicators, that sort of thing would help you, reach out, send me a message, and we can talk about a free 3-day trial. Or you can just go to caketrades.com and check it out. Thanks all. Hope this helps. I will see you on the trading.